Welcome back. Abneesh Roy, Executive Director of Nuvama Inst Equities, now joins in. Abneesh, good morning. Thank you for joining in. Consumption, FMCG is seasonally the strongest for consumer sector. But there's also noticeably been a K-shaped recovery, which means that some stocks have done really well with the focus on urban consumption, but anything with a rural footprint seems to be under some pressure. In terms of business updates that we've seen, what are you expecting from the consumption pack this quarter?
Sure, thanks for having me. Yes, December quarter, we will see a divergence in terms of results. We have seen the business updates. I think from the business updates, Dabur was decent. Godrej Consumer also, there were overall decent numbers, but there are some issues on the international and planned destocking, etc. So in terms of good results in December quarter, we expect United Breweries, Nestle, Bajaj Consumer, Tata Consumer, and Indigo Paints to have the best results. Yes, 3-4 key things we are seeing. Definitely, urban-focused companies are doing better. And that's why we are seeing that the festival demand and the winter demand has also been weak. So that's why companies like Hindustan Unilever, Marico, Colgate, United Spirits, etc. will have more of a middling performance. We expect poor performance from companies like Imami, ITC, Britannia, etc. So one, of course, is the rural slowdown, which is impacting Q3. We expect even Q4 demand to be fairly challenging in rural. We expect recovery to start in Q1 FY25, and we can go into the reasons behind that. Apart from this, we are also seeing the second issue of the local players. So because gross margins expanded in the past 2 quarters, we have seen local players in many segments like biscuit, lower-end detergent, hair oil, etc. coming back. And that's why we have seen that as an incremental new issue, especially in the rural and the urban poor. So that's why we are selective. But last year, CY23, if you see FMCG index gave decent return. It gave almost 30% return, and that was a middling performance. But that was led by a few stocks like Varun Beverages, ITC, Tata Consumer, Nestle, etc. Going ahead, our top picks will be United Breweries, Nestle, Tata Consumer, and we also like Dabur. In terms of 1-year view, we like ITC and HUL. HUL stock last 1 year has been underperforming, but we expect rural recovery to be a key trigger for the company in FY25, and pricing growth will also come back. In December quarter, HUL will have a negative pricing. Yes.
Abneesh, you've of course very concisely put exactly what you're expecting from the sector. But in terms of expectation, some of these stocks have actually done quite well in the year, and I came across a recent report which said that a price correction at this stage cannot be ruled out for FMCG stocks. Do you agree?
Yes, a lot of the stocks are at a life high. There has been a re-rating. For example, as we discussed, Nestle, Varun Beverages, Tata Consumer, United Breweries. A lot of these stocks are at a life high. So you can always see slight correction in a bull market also. The good part this year will be essentially, we do expect FI inflow to be strong. And normally FMCG large caps do find a lot of favor in the FIs because of the secular growth, very less debt, high corporate governance, etc., good dividend yield. So that's why we think that FI inflow should go into FMCG large caps definitely, and that's why HUL and ITC, although December quarter results will be weak for these two companies, you will see that from a 1-year perspective, it makes a lot of sense. So yes, select profit booking can happen in some of those names which I mentioned from a near-term perspective, but there is no big reason for derating also. So that's why we are not unduly concerned, because in terms of the key raw materials, also if you see for Nestle, the milk cost will deflate, and that's why next 1 year you will see gross margins expand in NAN, lactogen, etc. Similarly, for Tata Consumer and Hindustan Unilever, tea cost is down for the next 1 year, 8 to 9%. So you will see that benefit also. So we are positive on the sector. Rural demand continues to be one issue, which we think in Q1 FY25 will see recovery. So we are positive on the sector.
Nish, I want to talk to you about Titan because this one has stood out against all odds and it keeps standing out against all odds historically as well. Business updates, of course, have better than expected despite, lesser household savings being spent this festive season. Titan still managed to do quite well in terms of top line. What is your view on Titan? I know valuations there look stretched, and beyond your call on Titan, in your pecking order, what are your top picks in the FMCG consumption sector, urban, including rural?
Sure. In the discretionary space, you're absolutely right. Titan has posted extremely strong numbers for many quarters, and December quarter was ahead of our initial expectation. We also saw the other jewelers also do quite well. So Kalyan Jewelers also posted very good set of numbers. Senco also reasonably okay set of numbers. So this is a secular theme in jewelry that still almost 70% of the industry is still unorganized, local. And because of the regulations change which are happening, formalization of the jewelry sector is happening, that is driving towards the market share gains for the large players like Titan, Kalyan, etc. So that is something which will continue because still almost 70% of the industry is available for the formalization. Only 30% is organized. So that is one bit. Second, of course, gold prices are at a life high, and Indian consumer, Indian investor, if you see gold is an asset class, and if the gold pricing has done well, that also gives more confidence. And of course, December quarter, the 35 lakh weddings were there. So that also definitely helped because obviously in marriage, jewelry will be one of the key segments. So these are the reasons why the demand trends in Q3 were quite strong. But this is not something which is quarterly. It will be stable based on the marriage days, based on pricing, etc. You will see volatility. But yes, Titan, we have a buy and we continue to see value from a longer term perspective. Yeah, the stock is rich. But as I said, a lot of the companies in consumption space which are doing well, their valuations are re-rating. In the discretionary space, we like Titan, we like Trend, even Nykaa, if you see last 2 quarters, there is an improvement in the numbers, especially in their fashion business. And that's why that stock is also re-rated. But if you see Nykaa from the top, still there is a huge headroom for the stock to re-rate if they can continue to post better numbers in fashion and even in beauty if they can continue decent trajectory. So these 3-4 companies, I would say that from a 1 year perspective, look good.
Abneesh, I wish we could chat with you longer, but we will definitely try and get back to you post the earnings. I'd love to ask you a view on Honasa as well, but completely out of time. Thank you for joining us. In the meantime, the markets are also off the day's high point. We've come below 21,700, 21,600.